In the year 2000. In the year 2000, it was $256. Now it's $2,400. It's gone up in price 8.4% compounded for 24 years. It has been moving. It's done its job. And I think that's what investors need to pay attention to. I believe that the gold bull market continues. I believe that we're coming into the time in the gold bull market where silver begins to outpace gold. So all other things being equal, you may see an increasing number, as an example, of silver juniors here.
RickRule, a prominent figure in the natural resource investment sector and CEO of Rule Investment Media, has long emphasized gold's consistent long-term growth. His observations are particularly relevant in today's dynamic precious metals market. Rule points out that gold has demonstrated remarkable resilience from 2000 to the present, rising to $2,400 per ounce. This represents an impressive 8.4% compound annual growth rate over 24 years, underscoring gold's role as a stable store of value. Recent market developments seem to support Rule's long-term bullish stance on gold. The precious metal has been experiencing significant price movements, with analysts forecasting further gains. Commodity experts at Heraeus have suggested that gold prices could surge even higher if Donald Trump secures a second term in office. Similarly, CIBC has raised its gold price forecast to $2,600 per ounce, particularly in the event of a Trump presidency in 2025. The market has already shown signs of this bullish sentiment. Gold prices recently spiked during a North American trading session following the release of the U.S. Consumer Price Index. This data hinted at potential interest rate cuts by the Federal Reserve, causing U.S. Treasury yields to drop and gold to rally. The gold dollar reached $2,414, marking a substantial 1.80% increase from its daily low of $2,371. This gold price surge has a ripple effect on gold mining stocks. Since gold's breakout to new highs on March 1st, shares of companies like Agnico Eagle have soared by more than 50%, outpacing gold's 16% price increase. Similarly, Barrick Gold has shown strong performance, recently closing at $17.78, marking a 1.95% increase and outperforming the S&P 500. However, Rule cautions investors about the nuances of investing in the gold sector, particularly in mining stocks. He emphasizes the importance of focusing on a company's intrinsic value rather than being swayed by short-term price fluctuations. Please tune in for our exploration of RickRule's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Well, I need to tell you, I'm always leery about forecasts, particularly mine. I have a belief that gold is going higher because I have a belief that in objective terms, the U.S. dollar is going lower. I should qualify that. I still think the U.S. dollar will likely be the strongest currency in the world, which is to say that in terms of purchasing power, it will fall less rapidly than other currencies. But if you believe, like I do, that the real decline in purchasing power of the U.S. dollar is more like 7.5% compounded than 2.6 compounded, you understand the strength in gold. It was interesting. I was talking to an interviewer yesterday who said, Rick, when do you think the gold price is going to move? And I said, well, in the year 2000. In the year 2000, it was $256. Now it's $2,400. It's gone up in price 8.4% compounded for 24 years. It has been moving. It's done its job. And I think that's what investors need to pay attention to. Well, any space, the money in equities is made in the delta between what a company is worth. Remember that a share is only fractional ownership in a business. It's nothing else. It's the delta between the value and the price, and then the expected value. In an exploration company, you need to look at their process. If they've done some trenching, as an example, to validate surface sampling, and now they're going to drill for the third dimension. What's the target size they have? What's the probability of success? How long will the test take? How much will the test cost? What would be the likely value of the result? What's the probability of that result? You derive then an expected value, and it's the value that drives your decision, not the price. The statistic that's relevant to your audience, and they'll hate it, is that my average 10-bagger or better has required 5 years to come to fruition and has exposed me to at least one, but often two, 50% declines in the share price. If you have done sufficient work on the company, if you've kept up to speed with the company, these price declines become tolerable. If you are uncertain as to your investment, if you haven't done the work, they're terrifying. Well, one of the things that you try to do politely is, if they're in the exploration business, say, understand that these people are looking for gold. They don't have any yet.
Right.
If the price of something that you don't have any of goes up, it shouldn't matter much to the intrinsic value of your investment. You have to ground people in reality. The other thing is that what you are interested in is shaped by the macro. But how you make money is shaped by the micro. You make money at the firm level. You don't make money with big predictions. The second thing about that your audience really needs to understand is, if you are making an investment based on a long-term trend, don't have a short-term strategy.
Right.
If you think that the copper price could double in 5 years, don't have a 3-week outlook. Don't have a 3-month outlook. Don't have trauma holding a copper stock over a long weekend.
RickRule advocates for a nuanced approach to mining investments that prioritizes fundamental value over conventional wisdom. His perspective, which emphasizes the quality of deposits and management rather than perceived political risks or commodity trends, offers an interesting lens through which to view recent developments in the Mexican mining sector. Mexico, a country with a rich mining history, faces a period of regulatory change that aligns with Rule's observations about the complexities of mining investments across different jurisdictions. The Mexican Mining Chamber recently reported that mining investment in the country is expected to remain relatively stable in 2024, hovering around $5 billion. However, this stability comes with caveats that echo Rule's emphasis on looking beyond surface-level assessments. In 2023, Mexico saw a 5.8% decline in mining investment, dropping to $4.96 billion. This decrease occurred amid growing uncertainty following tightening regulations for new projects. The reform, championed by President Andrés Manuel López Obrador's administration, introduced significant changes to the mining landscape. These include shortening mining concessions from 50 to 30 years and implementing stricter water extraction permits in response to environmental concerns and water scarcity issues. Let's get back to the interview.
I would argue that the cost of capital isn't expensive. I would argue that the mining industry is over, not underfunded.
Interesting.
I would argue that of the 3,000 junior companies in the world, listed around the world, not just Canada, probably 450 are viable. Therefore, 2,450 are unviable. The fact that they can raise capital at any price means that capital is too broadly available. I have found, despite this alleged capital shortage, I've probably participated in 35 financings in the last 2 years. 28, 29 were oversubscribed and I got cut back. So for high quality companies, for good people, capital's very, very, very available. I'm going to offend perhaps some of your advertisers. For the lame, the halt, and the blind, capital shouldn't be available. The exhibitors here are always companies that are in my portfolio. We don't let somebody on the floor of this conference in a public company if we don't own them. Sadly, there's no guarantee that because I own it, the share price goes up. But there is a guarantee that the process is honest. I believe that the gold bull market continues. I believe that we're coming into the time in the gold bull market where silver begins to outpace gold. So all other things being equal, you may see an increasing number, as an example, of silver juniors here. But I really believe that size is what matters. So what you're likely to see here, as opposed to other conferences, is very large deposits in commodities that may not be in favor at this conference. Deposits, the value of recoverable reserves and resources exceeds $20 billion. It might be that there be rutile or graphite or copper or zinc. Overall theme is that size matters. What you'll see at my conference too is that I have a different view of political risk than most people. I believe every jurisdiction is lousy, that there are no good jurisdictions. I would rather have a great deposit in a tier 3 country than a tier 3 deposit in what is perceived to be a great country. So you will see more geographic dispersal, and you'll see more frontier and emerging markets represented. When I look around the world at the countries that have treated me the best as an investor, from the simple lens of cash in, cash out, the country that stands out around the world to me the best has been Congo. Hard country. The worst, cash in, cash out, and aggravation, was the People's Republic of California. by far. And people would suggest that California is riskless. It's riskless to me because I won't invest there.
Yeah.
People talk about permitting regimes. The Resolution Copper Deposit, controlled by Rio and BHP, in Arizona, allegedly a Tier 1 mining jurisdiction, has been stuck in the permitting morass for 26 years. And people tell me Sudan is risky.
Given the insights shared about gold's long-term performance, how can investors effectively balance the potential for gold price appreciation with the evolving regulatory risks in different mining jurisdictions when making investment decisions in the precious metals sector? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.